Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 14th of September. All right, now the pennies dropped. The CPI numbers pretty much came out right on expectations, right? Now, this is one of the, it can be a little bit disappointing because there's so much buildup and, that you sort of think you missed a good opportunity. But the core inflation year on year came out as expected. The inflation rate 0.1% higher. And same with the core, which was 0.3. So basically, it's right on the money. Okay, you saw a little bit of sporadic price action there on the charts, which is what you're trying to avoid. We either want medium to high variance on these numbers. If I just have a look at euro, you've got a little bit of a clean out here, 107.60, 107.10. That's the sort of price action around the number, and then everything settles down, right? So what does this do for us? Now, first of all, hopefully you don't get bent out of shape with the fact that you didn't get like the big winning trade from this, right? What we were looking for was a clear answer to what was going on in the US. And I think we've got it, right? If anything, the Fed's on track. So the November, no rate hike 19th, 20th of September. November, it's about 40%, probably even a little bit lower. But so let's just see how the numbers roll from here. But what that does for me with these numbers coming out basically as expected, it puts the dollar into a neutral stance, right? And this is still a good place to be trading from because now it gives the other currencies, right? That's the sort of last drop or the last major US number, before we get into next month, right? There's a lot of second tier, third tier numbers which can add up to moves, but you know what? The CPI is the big one, the main game. Now, the fact that that's done is it opens up opportunities here for the other instruments, right? The Aussie employment numbers. So from here, what happens on the Aussie against the dollar? So, the major pair will come from the Aussie, not from the US dollar. The dollar has now gone into a neutral phase. And that's primarily because all the hard work's been done. And as inflation keeps coming back down towards the Fed's target, the moves are less, right? You get less of an opportunity. So now it comes down into these other instruments, right? So we've got the Aussie there. We've got the ECB interest rate decision as well. Keeping an eye on that. No change expected, but the statement will be the key to it. And obviously also the press conference. So the euro is going to be front and center today. Okay, now, don't give up on the dollar just yet because we do have some retail sales figures coming out there as well. And that's going to give us a separate opportunity there also. But right now, the dollar will be influenced by what happens in the other pieces of data. So obviously the US retail sales will come into play, the ECB and the Aussie. So strength or weakness in the Aussie employment numbers, consensus 23,000, 3.7 unemployment. You get a stronger result here, the Aussie will go up. And obviously a weaker result, it'll go down. You don't have to worry about what the dollar's doing just at the moment. Now, as we come through that North American session, if we do get some sort of significant variance here on the retail sales figures, well, that's the next starting point for what happens on the dollar, right? If they're weak, okay, the dollar will drift lower. If they're stronger, the dollar will slowly jump up. But it's not like a CPI where you're going to get a really dramatic move. So just keep an eye on this. If there's no change of rates expected, right, from the ECB, that makes the press conference and the statement the key things to be looking for, right? Now, so is this a trading event? Only if they're surprised by changing rates, which they're not into surprises, right, at the moment. So the press conference, you're going to be playing it quite cool, see what they've got to say in their statement, and then the press conference as well. You know what? It's probably there's nothing on the table I can see just at the moment, but that's where you do your homework and you might find a diamond in the rough. So I wouldn't go around sort of jumping up and down, sort of looking for opportunities now because the market has been diffused by that data. If anything, okay, coming back to your charts, you are basically redrawing your trend lines to see exactly like to factor in what the current moves have been. Like you've got a little sort of flush out here on a lot of these charts. It's just a matter of redrawing the trend lines, reanalyzing the markets, putting the US dollar back in its box and thinking, well, you know what? This thing is now gone a little bit neutral just for the moment. As the US numbers start to drop from here, and I'm talking about the second, third tier numbers, that's where we'll start to sort of lean one way or the other if those numbers are strong or weak, right? But you need a bunch of them to add up to sort of to go one way. So, right, if retail sales are strong, then you need the next 3 or 4 numbers to be strong to sort of paint a picture that the US economy is still moving along quite well. If the retail sales are strong and the next US number's weak, well, we're sort of back to that neutral stance, right? And that's pretty much all we've got at the moment. You can't force the market to give you the trades. If anything, you just got to be patient and look for the next trading opportunity. And the easiest way to do that is just redraw your trend lines, look for the opportunities as they come up, and then you'll know the levels to hit. But right now, okay, it's a great time to be looking at these other numbers. And as you come through, I'll just get back on the other screen there. As you come through like Thursday's data, okay, and I've got this only on the high numbers. So if I even went to the lower tier, okay, you'll see there is a lot of data coming out, right? The employment's out of Australia. There's some numbers out of Japan, which probably aren't going to do much at all. ECB, US PPI as well, the retail sales, ECB. So that's what I mean. You go into the second tier numbers, there's a lot of data coming out. And even Friday, we've got a lot of Chinese data that's going to be relevant for the Aussie and Kiwi, and then a bunch of industrial production, Michigan consumer sentiment numbers are there as well. So there's lots on the table, but just take it from my sort of experiences. When I look at this, I've got the dollar as neutral. Equity markets a little bit up, a little bit down. Okay, nothing too significant. The majors at this point, you know what? They don't know what they're doing. They're sort of going sideways. I think the US bonds are a little bit lower. The yields, okay, takes a little bit of shine off the dollar. Commodities in the red, and that's all she wrote for the moment. So not much on the table. US CPI numbers, US inflation is falling. We are getting closer towards, the story turning from, are the Fed going to raise rates to being neutral to actually getting towards a cutting cycle. And that's where the next surge of cash is going to come from. All right, guys, all the best. Good luck. Cheerio.